Hi, this is Mr. Wumi. I'm here to talk about the difference between a bookkeeper and an accountant. This will be very short. A bookkeeper just registers and records transaction. They don't have the knowledge of the accounting concepts, the accounting skills, the accounting principles that you need to have to be an accountant. The technicalities involved to understand a transactional treatment, they don't have it. The accounting software does the work for them. So when it comes to the double entry principles, they don't even know how it's working. They don't know what has gone to where. They don't know. All what they know is that, okay, it's stationaries. I select stationaries, I book in. If there's any VAT, I put a VAT in, and that is safe, finished. That's what they do. They don't know what that is doing at the background, and that is where accountants come in. So we as an accountant, we know that what the bookkeeper has recorded is doing two things at the same time. There are two double entries involved in this. Two separate double entries involved here. The first one, when, say, Mr. Bain purchased a stationery costing 100 pounds. So in that case, what will happen is that, and stationaries, as we all know, is VAT applied. So in that case, VAT will be charged. So let's say the cost came to £100, and the £100, in that sense, what the bookkeeper will do is to just register. They will put the account number, which is stationaries. To select the account number stationaries, to put the description in. If the Ben bought the same item, it could be quantified. So we can put the quantity, then the price. Then that will give us the net amount. Then the VAT is always 20% standard. You select the VAT category or 20% VAT, then it will calculate. That will bring it to 20% £20 VAT. Then net amount will be £80. Then the gross amount will be £100. So making £100. So that is how it works. However, what is happening in the background, the bookkeepers, they don't know. If they make any mistake when registering the invoice, that will have a direct effect on the respective account in the background. So let's say Mr. Bain purchased stationery in. That is where the accountants come in the sense that we will check to make sure we do this, what we call the sense check, to make sure that in the VAT control account, we can see the VAT amount reflecting there, which is £20. When we go to the payables control account, we should see £100 sitting there. When we go to the expense account, we should see £80 sitting there. So the double entry, as we all know, is general knowledge when it comes to anyone that has done little of accounting would know the double entry principle, which means for every credit entry, there must be a corresponding debit entry. So we have some bookkeepers, they are just there to register the invoice. They don't know how it works. But we have some bookkeepers that they have some little level of accounting skills. So they know about the double entry principle. They know about it. So to them, they can, but when it comes to what they've done, they might not know how it's being is being recorded. they know is that they've registered the invoice, they've recorded the invoice the way they were instructed to do it, and does it, but in the background things are happening. So what will happen in terms of accounting, the standard double entry that will be generated will be you debit £80 dictionaries, you debit VAT control account, which is £20. Then the total of this will be credited to the payable control account. That is not it. The payment was made, so it will hit the bank. That's the second double entry, separate double entry. That means what will happen is when it hits the bank, you credit a bank, then you control the payables control account. So in essence, what it does in the payable control account is to reduce that £100 to zero. Strikes it out, reduces zero. Then in bank, of course, we have the bank balance that we've been drawing down. So you debit payable control accounts £100, then you credit the bank account, which is 100 as well. You credit that. So what is that? The payable account will be reduced by £100, and the bank will be drawn down by £100. You need to understand how the statement of financial position works, which is our balance sheet. You need to understand how it works. And when you understand how it works, you will be able to review it accordingly. The balance sheet, because where the control account is our balance sheet, and our balance sheet depicts the financial standings of the company. So the items we have there are controlled in the sense that the balances that appears there must be genuine. It must match with real life situation. That's what the balance sheet is doing. The P&L is to determine the financial performance of the business. So any respective expenditure hits P&L, any respective income hits P&L. But the bookkeepers, theirs is to just record it, and that's it. So anybody can be a bookkeeper. Even a salesperson can be a bookkeeper. Anybody can be a bookkeeper, as long as you've been trained on what to do. When the invoice comes in, this is where you need to, when you go there, this is what you need to put here, the description, net amount, the VA. Sometimes the VA calculates itself. When you select the right VAT category, it calculates itself. So all this thing, you can be trained, you just be doing it, just be treating the invoices. When a credit note comes in, what you need to do, so you get it. When a credit note comes in, I just need to understand the invoice that it relates to and treat against that invoice. So these treatments can be done by anybody. However, what accountants we do is to ensure that the treatment that the bookkeeper has done is correct. And that is where the technicalities comes in. That is where we make sure that we are adhering to the principles of accounting. We are adhering to the rules and regulations. We are adhering to the standard, the respective standard guiding that business in terms of accounting and in terms of the jurisdiction that the business exists in. That is the job of accountants. That's what we do as accountants. That's what we do as accountants. So, gone were the days where accounting is seen as static, not flexible, very rigid. Stay in our own corner to do our own thing, which actually affects our communication skills. It really affects our communication skills because of the way we were trained. But now it has changed. We are living in an era whereby accountants are seen as business partners. Because we are seen as business partners, we engage more with stakeholders. That improves on our communication skills. So you see how it works. So understand the difference between a bookkeeper and an accountant. Not all bookkeepers are accountants. Not all bookkeepers has embarked on any accounting program or accounting course. They are just on the to-do list. That's what I'll call. That's not knowledge based. That's not expertise based. So you get the difference. So get the difference. Who an accountant is and who a bookkeeper is, to help you in the long run. Thank you. This is Mr. Wumi. See you next time. Bye for now.